Good evening. My name is Councillor Marcus Andrews. Welcome to Audit and Governance Committee, Thursday, the 11th of January 2024. I'll be chairing the meeting this evening. But before we actually commence the meeting, can I go over to Democratic Services Officer for the housekeeping rules, please?
Thank you. Please note this meeting is being recorded by the Council for live broadcast and will be published on the website for a minimum of 6 months. Please could everyone present follow these ground rules. Only speak when invited to by the chair. If accessing via Teams, always turn on your video function when invited to speak and state your name. Please use your microphones when speaking and please mute or turn off your microphone when you are not talking. If you're accessing via Teams and would like to speak on an item, please indicate using the raise your hand feature in the bar at the top of the window. For those in the room, if the fire alarm sounds, please exit the building by way of the nearest available signed fire exit route and make your way to the assembly point in the surface car park at the front of the building. Finally, please ensure background noise is kept to a minimum and mobile phones and other devices are turned off or switched to silent for the duration of the meeting. Thank you.
Moving on, do we have any apologies?
We have no apologies, Chair, and we have no substitute members.
Thank you very much for that. Item 3 on the agenda, declarations of interests. Have any declarations of interest been made?
Chair, I've not been advised of any in advance of this meeting.
Okay. Can I just check if any members want to declare an interest now on any item on the agenda which they feel relevant? Obviously, there's a spreadsheet where you can check whether you think something is relevant or not. If not, we'll move on. Okay. Item 4, confirmation of the minutes. The last meeting was held on the 30th of November 2023. The minutes have been circulated with the agenda, and I obviously now seek approval from the committee here for me to sign as an accurate record. So is there any queries or can somebody propose accepting the minutes? Councillor Fairway, yeah?
Yes, I noticed that Lindy's name was missing on the name of the attendees. I think it just had her surname.
Yes.
Yeah.
If that could be said, well spotted. Apart from that, you're happy to propose acceptance?
Yes, yeah, will do.
Somebody second, please. Councillor Castle, thank you. Okay, let me just. Okay, moving on. The next item is public issues. Can I ask whether any questions or statements have been submitted, please?
Thank you, Chair. Yes, we have 3 public questions and 3 public statements in relation to agenda item 8 from Mr. Alex McKinstry.
Mr. McKinstry, if you can come to the microphone, please. Thank you. Over to you when you're ready.
Okay, good evening, committee. Question 1, and these all relate to agenda item 8. Excuse me. First question, in the officer's report on the governance of council companies, paragraph 2.3 states there were initially going to be 6 council representatives on the shareholders team of Future Places, but this was reduced to 2 because of budgetary pressures. I have to admit, this is the first I've heard of a shareholders team on Future Places. Who then were the original 6? Who were the ultimate 2? And how did budgetary pressures have an impact exactly? Were the original team going to be remunerated, for instance?
Okay, thank you for your question. The Cabinet report approved on the 29th of September 2021, entitled Accelerating Regeneration and Investment in the BCP area, set out the need for a delivery team to provide oversight of all regeneration and development activity undertaken by BCP Future Places Limited, the Bournemouth Development Company and the Boscombe Towns Fund Board. This was to be a council officer team consisting of 6 posts, including a service director. However, Not all posts were initially recruited to and were subsequently deleted. In April 2023, the service director left the council and the post was taken as a saving. Since then, a further post has been made redundant. The remaining posts will form part of the new Investment and Development Directorate, which is being created following the closure of Future Places as set out in the Cabinet paper entitled The Future of BCP Future Places Limited Investment and Development, which was approved on the 27th of September 2023. Your next question, sir.
Paragraph 2.10, meanwhile, states the reason no commissioning agreement was ever finalised between the council and Future Places, nor any resource agreement, was differences between the parties. What were these differences, and how come they weren't resolved during the 2.5 years that the company was operating?
Thank you for your question. When Future Places was created, it was envisaged that a contract will be put in place setting out the working procedures for the delivery of services to the council along with resource agreement, which would set out the provision of support services back to the company. Both of these documents were complicated and required substantial information, including process mapping, to be collated. These processes inevitably evolved as the new company began to operate. There were no major ideological differences between the parties on the approach to be taken. However, the time required to align the detail of the contractual arrangement was substantial, and the officers from both the council and the company were unable to dedicate the time and resources required. As a result, although the documents were never finalised, the parties entered into 2 agreements by conduct and adhered to the practical working arrangements set out. And your third question, please.
Finally, the governance aspirations listed in Annexes B2 and C include the following. C10, there should be evidence of ongoing assessment of value for money and quality offered by the entity through an adequately resourced monitoring function. To underscore the importance of this ambition, can you confirm the total amount of rent paid by Future Places for its premises in Exeter Park Road, which it occupied between August 2022, the signing of the licensing agreement, and the 31st of October 2023, which was its termination? Can you confirm the total amount of bonus payments paid to Future Places staff in 2022, said to be 10% of their base salaries, and in 2023, said to be 12.5%. Can you also confirm what mechanisms were in place to ensure that these payments, that is the rent and the staff bonuses, constituted value for money?
Thank you for your third question. In response to item one, effectively, the agreed rental was £54,000 per annum paid in advance. The rental amounts were 34k between August 2022 and July 2023, and £27,000 between August 2023 and January 2024, a total of £81,000. As regards section 2 of your question, the total amount of bonus payments paid to Future Places staff in 2022, said to be 10% of their base salaries, and in 2023, said to be 12.5%, were as follows. So for the financial year 2022, the directors' bonuses totaled £9,700, 10%. For other employees, the figure was £6,907, so that totals £16,607. For the financial year 2023, the directors' bonuses were £36,875. That's the 12.5%. For other employees, it equated to £56,994, and that totals £93,869. As with any other company, it was the responsibility of the board of directors to ensure the rental costs represented good value for money. The board of directors is accountable to the shareholder for the performance of the company. The bonuses were determined by Future Place's own remuneration committee, which consisted of non-executive directors of the company. And then we have some public statements, and I think they're all from you, Mr. McKinstry. So stay where you are, and if you would let us have your 3 statements one by one. Thank you.
Statement 1. When Future Places was formed, the council paid external consultants to devise a commissioning plan for this outfit, and the result was a 6-stage gateway process that would chart each project from inception stage to delivery. A commissioning team would be appointed and a project management office established to manage the said gateways, to monitor the key milestones and assess risk. That process was then refined, and the finessed procedure was approved by full council on the 12th of July 2022. Yet we find in tonight's report that key performance indicators were, quote, absent from Future Places. There was unclear and informal routes for operational decision making, and the company was even initiating work, quote, without a clear commission, unquote. This really is scandalous, and the committee should drill into how and why the company's governance protocols were bypassed in such a way, as the 11 short paragraphs in tonight's report do this matter scant justice. Statement 2. The report also reveals at paragraph 2.11 there were differences in understanding between the council and the company in relation to how the financial model works. This is incredible, not least because the then leader of the council and then portfolio holder for finance was one of the executive directors. The finance model was the Aristotelian flaw in this company. My concern was that a political group with a majority would whip any scheme through full council, regardless of its defects, to pay the company a success fee and thus get its loan repaid. Conversely, there was a risk that if schemes were not approved, the company would continue chomping through the loan agreement, and it was this indeed that appears to have scuppered the company. The finance model was in short encircled with risk and should not be repeated in any subsequent council venture. Statement 3. Finally, there's the matter of the company costs, which aroused residents' concerns from the beginning. A working capital loan of £400,000 was advanced to the company in 2021. That was drawn down in full. The company was then allocated £3.024 million from the revenue budget, of which £1,329,063 had been spent by June 2022 when the company was transitioning to capital. £647,000 transitional funding was then made available, followed by the £8 million loan facility, of which £4.75 million had been spent by September 2023. That expenditure alone tots up to £7.1 million. Given the cryptic line on page 91 of tonight's report that company payments should not be approved on the nod, this committee should request a full forensic accounting of the expenses incurred by this company, including the costs of its imminent dissolution. Good evening.
Thank you for your statements. We will now proceed to the agenda for the remaining items, and that's obviously commencing with item 6. Sorry, Councillor, please.
Chairman, I wonder whether Democratic Services could reissue the 3 questions and 3 statements together with the 3 answers to the 3 questions, so we've got them all in one place, please.
I have already requested that the officer does that after the meeting. If you're able to do it during the meeting, that would even be better. Thank you.
Thank you very much.
Beasley. Thank you. Right. We move on to item 6, the external audit. The annual audit findings of 2021 2022 progress. This is going to be a verbal report presented from Peter Barber, who joins us online. Hello again. Can you let us have your update, please, Mr. Barber?
Thank you, Chair. Good evening, committee. You'll recall, and I think it was covered in some detail in the minutes that were a previous item on today's agenda, that at the last meeting of this committee at the end of November, we provided members with our draft audit findings report for 21-22 that at that stage indicated that the audit was well progressed. I think the percentage quoted was 90% of the way through. Pleased to be able to report that good progress has been made in the intervening period, and the majority of the areas that were outstanding have now been concluded, and importantly there's no further significant issues that I need to bring to members' attention. That said, and maybe not unsurprisingly, and I do at times think I do sound a bit like a broken record, but we have one significant area outstanding, and that remains the pension fund liability and the IS 19 letter of assurance from the auditors of Dorset Pension Fund. We did spend some time at the last meeting of the committee discussing what could be done and what levers could be pulled to try and obtain this in a timely manner. I've had further conversations with PSAA. I've also gone back again to the partner at Deloitte this side of Christmas to understand timings, but haven't had a response. So at the moment, we are in the frustrating position, much as we were last year, where we're very close to signing, with the exception of the IS 19 letter of assurance. I think in the report at the end of November, I did say the aspiration and anticipation was a clean opinion, which is clearly what you're after in the accounts, that I was hoping to give it the February meeting. I actually think now that the next meeting of this committee is very early in March, and I continue to hope that something will be received in the intervening period, and we can do our work and gain that last bit of assurance and enable us to sign off after the meeting in March, at which I was hoping to bring a final version of the audit findings report. So that's where we are. There is nothing else I need from your finance officers at this stage. We have all we need, but we will need to do some more work in that area, and we will need to subject the file to a final quality review once that work's been done. And sign off is purely dependent on the receipt of that letter of assurance. Chair, I'll stop there, but I'm happy to take any questions.
Okay, thank you for that. Any questions from that update? Lindsay.
Thank you, Chair, through you. Good evening. I would just like to know, I've had sight of the 2021 IT report, and I've requested it from management. Will you be issuing a 2022 IT audit report? And if you do, if you can just then circulate it to management, and thank you.
Through you, Chair, if I may. So the IT risk assessment and work is undertaken every year. It's done on a cyclical basis. So I think from recollection, the IT report that I'm assuming you're referring to was from the prior year, and we would roll forward that and supplement it. So we don't issue, as a matter of course, an IT report every year, but it does form part of the risk assessment, and where appropriate, and if there are internal control weaknesses in terms of IT risks that result in extra work, which is the case every year at BCP, we do refer to that in our audit findings report. It was referenced in the audit findings report of November, and it will no doubt form again some of the narrative in the final report that as I said, I'm hoping that I can bring to the early March meeting, subject to that IS 19 work being concluded.
Okay, thank you for that. Sam.
Good evening, everyone. Is it possible for the next meeting that maybe we can see the final report without that final bit, just in case it doesn't turn up? because this is just dragging on, and it may be that members of the committee can feed back on that version so that when you do finally get that last little bit, it really is done and dusted, because it's dragging on a lot, isn't it? Which must be frustrating for you as it is for everybody here.
Through you, Chair, again, if I can. Absolutely. The only thing I would say, I'm not sure how different it will be from the one that went in November, but I'm absolutely happy to do that because it won't require much work on my part. Clearly, what I will have to do is issue a final one once that IS19 work is done. So I'm just conscious that the risk is that I end up issuing lots of iterative versions of the essentially the same report, but I'm absolutely happy to do that, and it won't require much effort on our part. But clearly, a much preferable outcome would be a final version.
Thank you for that. Well, as I say, this was a verbal report for us to note. Yes, the next meeting is in March, so hopefully over the next several weeks there will be some material developments, and we can have some white smoke and success, and something has happened. Thank you very much for your attendance. Thank you,
Chair.
Mr. Barber.
Thank you. Thank you.
The answers to those questions and the statements have been circulated to committee members, so you've got that now if you're committee members and the independent members. Thank you. Moving on, item 7. This is the Treasury Management Monitoring Report for the period April to December 2023 and the Treasury Management Strategy for 24-25. And we have Matt Filmer here to present the report. Matt, over to you. Thank you.
Thank you, Chair, and good evening, Audit and Governance Committee. The report actually is made up of 3 parts, and I'll take each one in turn if that's okay. So the first part of the report is the usual quarterly update in terms of the Treasury Management function. It always starts off with a brief economic update, which I'm sure most of us have seen in the news, but inflation is now going in the right direction in terms of reduction. The December CPI rate was 4.2%, which has dropped from over 10% previous to November, but it's still over the 2% target the Bank of England works to. And only yesterday, the Bank of England's governor confirmed that the 2% target is what they're working to, and they will not reduce interest rates until that 2% target has been met. You'll see on table 1 of the report, our Treasury Management Advisors Link are assuming a cut in the interest rates around summer this year, which actually plays into some of the recent news we've seen from economists, which are predicting that we'll start to see a sort of 2% rate of inflation by spring this year. So moving on to table 2 of the report, it sets out the forecast performance of the Treasury function, and we're predicting a £650,000 improvement against budget. That is a reduction compared to previous quarter. We've got less cash balances than what we'd assumed back in quarter 2. And that variance is down to higher interest rates than we expected when we came into setting this budget. And table 3 and table 4 sets out the council's borrowing and investments as at the end of December, with no real noteworthy change to highlight. So the next part of the report, which starts on paragraph 16, is the proposal to change the council's minimum revenue provision. And I'll refer to that as MRP, because I'll probably have to say it a few times in the next couple of minutes. So MRP, put simply, is the repayment of debt. Okay, it's a statutory charge. We have to set aside an amount in the general fund budget, which is funded from council tax, to repay the council's borrowing. And it's for the council to set its MRP policy. It's the council to determine, and the policy forms part of the Treasury Management Strategy, which is the third part of the report that I'll introduce. And as I said, it's for the council to determine a level of repayment. And there's 2 key things that I want to highlight. One is it must be prudent, and it must have regard to statutory government guidance. The prudent aspect isn't something that's necessarily set out in statutory guidance, but there are highlights in terms of what should be considered when setting a prudent charge. And that does not necessarily mean setting a charge which repays debt as quickly as possible. It should also take regard of the council's financial position where it currently sits, where it is in terms of its long-term financial plans. It should have regard to the council's capital programme, where it currently is, and where it is looking in terms of future expenditure. And it should also take some regard of the transformation programme as well, and the plan set out within that. So the council's had a review of its MRP policy carried out by Link Asset Services, which is, as I said earlier, the Treasury Management Advisors. And they carry out this assessment as quite a standard review for a lot of their client base nationwide. And their objective was to find a more cost-effective MRP strategy whilst remaining prudent and compliant with statutory guidance. And their findings are set out from paragraph 23 to 32 and detailed on appendix 2 to 3 to the report. Now, the key change, and this is where it gets a little bit technical, so I'm going to try and keep it simple and refer to some things that hopefully we can all understand. So the current MRP policy is made up of two different approaches. One is what we refer to as a reducing balance. And put simply, it's a figure that we reduce every year by a set percentage. And by doing that, the issue with that, it means it takes a very long time for that debt to be repaid. The other approach that we also implement is based on an asset life method. And that's, put simply, if we were to buy an asset for £1 million that had a 10-year life, we would charge £100,000 every year for 10 years until that debt's repaid. And those are the two methods that we currently employ for our MRP calculation. What we are looking to do is move to an annuity basis. Now, annuity basis, the best way to perhaps consider how this would work is if you consider a sort of standard mortgage product, where a mortgage which has a term of 30 years, at the beginning of that term, you're going to pay more interest than you are principal, the actual repayment of that debt. And as you go along the term, towards the end of that term, you're paying a lot more debt than you are interest. And that's how the annuity method works. And what that means is that we can have a saving on MRP in the early years, but it means the charge for MRP will increase year on year. So as a result of the review that Link Asset Services have done, the cost saving that can be achieved by the proposal to move to the annuity basis would be circa 9.2 million in 23-24, and then it falls to 8.8 million in 24-25 and carries on falling, that saving as an ongoing saving. One of the considerations when looking at this was we wanted to avoid the sort of kicking the can down the road, so to speak. Are we saving up costs that are going to have to be dealt with further along the years? And although that is the case, the annuity method has two advantages. One, that the debt will be repaid sooner, and that's set out in Appendix 2 and 3. You can see the debt will be paid quicker. And one of the more technical aspects of the annuity method is it takes account of the time value of money. And what that means is rather than paying £100 in 10 years' time is less of a burden than paying £100 now. And that's one of the aspects that the annuity method builds in. One of the key, and I appreciate I've spoken quite a lot on MRP and it's quite technical. One of the last key things I wanted to draw out was in regards to voluntary revenue provision. So I referred to minimum revenue provision, which is the minimum amount we have to set aside, but we can also make voluntary provision in any year for any amount. And the good thing about voluntary revenue provision is it's banked, and it's banked forevermore. And one of the key aspects that I think we need to consider, and something that SELF and the Section 151 officer are looking at, is setting aside VRP, as it's known, voluntary revenue provision, so that money's banked and offsets the future costs of the MRP as it starts to increase. Okay, and then the last part of the report is the Treasury Management Strategy for 24-25, which is Appendix 4 to the report. The Treasury Management Strategy sets out a number of things, but it sets out how the council will support its capital programme, so how it will fund that. If it's funded from borrowing, it will set out how we plan and how to phase borrowing, who we will borrow from. It sets out who we can invest with, how much we can invest with them in terms of counterparties. There is not a great deal of change is for the 24-25 compared to our current treasury management strategy. One is the proposed MRP change that I just set out. And the second biggest change is in regards to the council's debt caps, which are referred to on page 39 of the report pack. And those debt caps are known as the operational boundary and the authorised limit. I won't go into detail what the two are, but those caps that are set reflect the audit and governance decision back in July to reduce those debt caps from over 1.3 billion to just shy of 800 million. I know there was a question about how that's calculated in terms of the debt caps, but they're reflective of the council's capital borrowing programme, although we include a bit of headroom for any sort of temporary borrowing that might occur around that time. I'll stop there, Chair, and take any questions.
Thank you. I've got a quick question. There's a duplication of subheadings just before paragraph 16 and 21. It's the same subheading. Is it that the years in the second one should be 24, 25?
Through you, Chair. It is a duplicate MRP policy change 23-24, but it's still relevant, if that makes sense. It's duplicated, but it's still in relation to the MRP policy for 23.
Okay, don't worry. Thank you. I'd like to bring in Councillor Mike Cox at this juncture because he's the portfolio holder for finance. He's joining us online, and by profession, he's a chartered accountant, and it is a complex thing that's being proposed or suggested to us by the officers. And equally, if you look at the recommendation in front of us, it's a matter that has to actually go to full council. So obviously we have to get this through full council. So I want this committee to understand as best possible what is being suggested. And Councillor Cox, over to you to help explain it. Thank you.
Thanks very much, Chair. I'll do my best. I just wanted to really add to what Matt has already commented, and to emphasise the fact that this change does remain with the council being prudent and compliant with the law. This, as many of you will know, the administration has taken great lengths really to reduce the overall risk, particularly the financial risk of this council, which got itself into a bit of a mess. And as part of that, it's been the fact that we are balancing the budget and not leaving behind a £30 million deficit from reserves. We've reduced the debt threshold significantly, nearly halved, and we're doubling the increase in the reserves, in the general reserves. So this policy, which is set out here, has been recommended by our independent advisors, Link. We are consulting with the auditors on it, and I would emphasise that it is used by over 60% of councils. So this is not an outlier. This is common practice amongst most councils. And just to emphasise the fact, I went on a LGA finance conference on Tuesday and specifically asked the question of the panel of treasurers that was there, all of which were presidents of one council treasurers association or another, and they also strongly recommended the policy which we're hopefully going to adopt, i.e. the change in the MRP policy. So that's all I wanted to say really, but happy to answer any questions.
Thank you for that. Any questions or statements from Claire Way, Councillor Claire Way?
Okay, when I tried to find out a bit about how this works, I understood that from other councils they use this kind of borrowing to fund something that might provide a sort of income stream or an asset or something. What are the assets behind this borrowing, and is any of it debt as a result of a capitalisation direction?
So answering your question in reverse, there's no capitalisation direction in terms of the debt outstanding. All the debt is asset backed. Okay. Some of those assets will be income generating, some of them will not be. Some of them are very historic, and actually some of them we don't necessarily know exactly what assets were used because it harks back to pre-LGR, back to sort of 2008 and even before that in some aspects. But they were all asset backs in terms of the debt that's held.
Yeah. Segment.
Okay, second question. So looking at the tables, can you just help explain them? Because I'm on page 27 and on page 29. It looks like there's a subtotal of the reduction cost. There's a figure of 19,000 and 10,000. Then it looks like the grand total is 0. I don't really understand. I don't know. It's just those bottom rows of both tables 27 on page 27 and on page 29.
Okay, through you, Chair. I think we're referring to Appendix 2 and Appendix 3 tables of the report. So what that sets out, and I didn't want to go too much into it, but there's two types of borrowing. One is supported and one's unsupported. Supported is typically historic debt that was previously supported with government grant. It's historic, and that government grant's since gone. But nonetheless, there's two types of borrowing. And what the Appendix 2 and 3 sets out is the current repayment profile, which is the second column to the left. And then what the revision of those repayments will be based on the annuity basis. And then what that reduction looks like in the early years, but then you'll see when you get to the latter years, it starts to increase compared to what we currently pay. The last column is the NPV. That's taking account of the time value of money, discount rate of 3.5%, which is the standard Treasury approach. And if you go to the very bottom of those tables, you'll see the repayments are both the same because the debt's the same that we're repaying. It's just that you'll see that the debt's paid off sooner on both examples compared to the current repayment profile. So you'll see on page, which page is that? 27. For page 27, based on the supported borrowing annuity basis, we paid off the debt in 2072-73, but based on the current MRP policy, it would continue for over 100 years and more.
Thank you for that. Vice Chairman.
I think is your question that the third column is just a function of the other two columns. Is that?
Yeah, it just where we've got years 51 to 100, I read that as a subtotal, and then 100 plus. So you've got that figure in brackets of 19 odd thousand and then 10 odd thousand. Like, why is there a 0 underneath it?
I think it's the third column is the sum of the previous two. But it's different between, so it's 0 because of the balancing figure.
Yeah,
Thank you for that.
it changed that way. Okay.
Any other questions or Councillor Collins?
Yeah, I've got two questions. So obviously I can see the attraction of paying less in the near term. The question is simply what's the catch? It says it will lead to higher capital financing requirement, borrowing requirement, and presumably it's more sensitive to interest rate changes. So could you just outline the risks associated with this move and how you got comfortable with the ability to manage those?
Yeah, through you, Chair. So there's, I'll probably just highlight some of the disadvantages of the approach, which are on page or paragraph 29, one which you picked up in regards to the higher capital financing requirement. And the capital financing requirement is basically the level of debt for the council. And because we'll be paying less of that debt off in the earlier years, it means that our debt level is higher. And that's a risk. And that is highlighted on paragraph 29. The other aspect that touches on is in regards to actually our cash levels as well, because we're currently earmarking a higher level of cash in the budget. That cash actually goes to the balance sheet, which repays debt. Because we're ring fencing less cash, that cash is then available to do other council activities, which means we could earn less investment income on lower cash balances. So that's one of the other risks to this annuity method. Is that helpful?
Well, just how you get comfortable with that, managing that risk overall, perhaps one for the portfolio holder.
Before the portfolio holder comes in, I mean, one of the key bits that I picked up on was with the regards to voluntary revenue provision. Is something that we really must look at as a council, because that will earmark cash, so it keeps the investment balances high, but also then offsets those higher charges in later years.
Okay.
One quick follow-up question, which was just, I take your point that it's an approach taken by more than 60% of local authorities, and I take comfort from that. While the external auditor is still on the call, it'd be helpful to find out how Peter thinks of this policy and how it compares to what other local authorities are doing, just to get a sense of sort of how racy it is, how risk on it is.
Adam.
Chair, I don't think the external auditor is actually currently on the call. He came for his items, but then he had a personal commitment that meant he had to drop off.
Yeah.
He clearly did hear Matt's introduction, but he then had to leave, unfortunately.
Okay. I've got Margaret Phipps indicating, unless Councillor Cox wants to come back, particularly on that query.
Yeah, I mean, as I said in my discussions, we are having discussions with Paul, and I think actually I haven't had any personal discussions, but I know Adam has had discussions. You know, clearly he's testing it from his perspective, as he quite rightly should do as an auditor. But in terms to answer Eleanor's question, you know, I've got comfort from it by looking at the fact that it's used extensively by other councils. I also got some personal comfort on Tuesday by when the president of the president of two of the treasurers associations both gave me specific assurance saying it's a no-brainer. We've done it. You should do it.
Thank you for that, Councillor Phipps.
Yeah, it's quite a quick question, really. At the end of the day, you say it's used extensively by other councils, and obviously it's a very good idea. Apparently, why have we never done this before or even thought about this before? It never seems to have even come up or been considered in any, well, I've been in quite a few councils and I've never heard of this before. Have we been missing a trick or something? Why are we suddenly coming, is it suddenly coming up now? I think.
Yes, well, why didn't we do it before, Councillor Cox?
I can't comment. I wasn't
Mr.
there
Richards might have the answer.
Chair, if I may attempt to respond to that question. You know, clearly, we've inherited the approach from Dorset Council, Christchurch Council, Poole Council, and Bournemouth Council. And I think it's fair to say that generally those councils operated in a very prudent way. And clearly we have a responsibility to every year review our accounting policies to test whether they're fit for purpose for the current position that we're in. As we set out in the financial strategy to Cabinet in July, that Cabinet endorsed, we will look at those accounting policies, test them, and make sure that they are currently, if you like, fit for purpose and taking account of all relevant salient factors. And it was through that test and challenge process that led us to the position as being recommended to you tonight. Clearly, before then, you know, it was something that actually we hadn't had that feedback that there was, you know, potentially a different way of looking at it. So, you know, I think it's one of those, you know, every day is a learning day. You know, we were challenged, we took the challenge away, we tested it externally, and as Matt said, you know, link our Treasury advisors, they sit on the government's panels that advise government on Treasury policy, so it can come from, if you like, no better place, and they've given us that feedback, and you know, we therefore present it to you for consideration tonight.
Okay, thank you for that. Basically, I think we're going to give it a good airing. I need somebody really to propose the recommendation and somebody to second it, and we can then take it to full council on the 20th of February, unless there's got any other questions or queries.
Happy to propose.
So the Vice Chairman is proposing. Councillor Claire Waite, you second?
Yeah, fine.
Okay. And we take, let's agree we don't need to take a formal vote. You know, it's a no-brainer by the sounds of it. Okay, everybody's happy with that. Okay, as it's going to full council, shall we actually take a formal vote with some hands? So it's unanimous from those who are allowed to vote. Thank you. Thank you for that, Mr. Filmer. We now move on to item 8 on the agenda. This is council-owned companies shareholders governance review. This report that we have this evening was looked at overview and scrutiny on Monday, and also I think it went to cabinet yesterday. We've got various people here to talk to it, but first of all, I'd like to go to the relevant portfolio holder, Councillor Jeff Hanna, who is here with us this evening, who can particularly give an update as to what happened at cabinet yesterday. Mr. Hanna, over to you.
Thank you, Chair. First of all, could I invite members to check their inboxes? The Cabinet made a decision which is an amendment to the recommendation that you have in front of you, and there are additions to it. That has been circulated by Jill, so that should be available to you to look at as a Word document, and that might be helpful in your considering the item as a whole. The second thing to say is this is not a report about future places. It does draw on lessons to be learned from future places, but also from other reviews as well. I will let Mr. O'Donnell in a moment explain the detail of that to you further. But this report is about the way in which we look at the governance of other council-owned companies, and it proposes that we review their governance in the time scale that's set out in the recommendation. The key considerations in terms of changes to governance are to do with the respective roles of councillors, council officers, and the companies themselves, and the decision-making process, the way in which Cabinet determines what the policy of the council is, what budget should be provided to the companies, and requesting an annual business plan prepared by council officers working with the company, and approving that plan subject to the views and advice of scrutiny prior to that cabinet meeting when it happens in the future. But it's setting out the way in which the review will take place, and it's still a case of there is work to be done on that up until the end of March, and it won't be until July that Cabinet actually receives proposals. Until such time, the companies will continue to operate in the way that they have. If I come to the actual wording of the recommendation that was agreed by Cabinet yesterday, item 1 was originally simply approving the governance model set out in Appendix 1. The third box, the third red box on the right in Appendix 1 had originally said that company has no role at scrutiny. That was discussed at scrutiny, and it was agreed that, in fact, the company may be requested to provide evidence to support scrutiny as required. So the wording in that box has been amended to allow for that. Item 2 of the recommendation simply confirms that the future arrangements for council companies will be based on the local partnerships best practice model. Item 3 sets out the timescale for the review, already mentioned as the reviews being undertaken, and this is a review of each company, in a sense, separately, looking at the issues relating to each by the 31st of March, with subsequent action plans coming to Cabinet in July of this year. There was then a question raised, which is whether the individual company is the best means by which that particular service is provided to the council. And the feeling was that we should not simply review the governance of companies without considering whether having that company is the best way of doing things. So paragraph 4 in the recommendation is setting out that in each case, the review will consider whether the original reason for establishing the company still applies, and it will look at future options for delivering the function provided by the company. There may be alternative ways of providing the same services. And I'm grateful to members of the Scrutiny Committee for specifying some of the considerations that should be taken into account, which is why there's further amendment saying taking into account the cost benefits, the benefits to residents, the potential in each scenario for accountability and transparency, because that is important, and the avoidance of potential conflict between the aims of the council and those of the council company. The last paragraph in the recommendation that was agreed is simply clarification that at this point in time, we are looking solely at companies where the council is a shareholder. There is the intention that a future report will consider other companies and organizations such as charities, associations, community interest companies, and societies. So that clarifies what Cabinet has decided. In terms of this committee, I await with interest comments which might well feed into the process of review, and in due course, no doubt you will want to look closely at the way in which Cabinet considers companies should in future be run and established. But that's it from me, and Mr. O'Donnell, I think, has further detail to provide.
Okay, thank you, Councillor Hannah. Effectively, what you're suggesting is that the recommendation we have on page 55 of the agenda, item 8, is expanded with that text which you've circulated, which is based on what the Cabinet decided, which was influenced itself by overview and scrutiny's recommendations. I think we'd like to bring in next Ian O'Donnell, the interim corporate director of resources, to who was the author of the report, to expand on what's been said already, and summarise your report. I appreciate this is probably the third time that you presented this week, but Mr. O'Donnell, over to you.
Thank you, Chair, and good evening. Councillor Hannah has covered quite a lot of the things that need to be said about this report, but I'll begin by saying that the objectives of this report were to bring in a new shareholder governance model for the council, to adopt best practice, and to initiate a review of all of the council companies. So that is its purpose, and of course to learn the lessons from future places. Now, the importance of having the right shareholder governance model has been underlined by not only future places, but a range of other events that are happening around the country in relation to council companies. This is not the first time that these sorts of issues have been discussed at a council audit committee. And so what's important here is that we learn the lessons of the past, learn the lessons from experience elsewhere, and make sure that we get our governance right in relation to the shareholder function at BCP Council for the future. Now, importantly for this committee, this report sets out to address the best practice in governance. That is a concern for this committee and something that they need to be assured about. And the second thing is that it addresses the issues that were raised in that independent external governance review and allows us to demonstrate that we've taken the action necessary in order to deal with the points that were brought up. And those things were set out in the subsequent best value letter, so we need to respond to that. And then the other point for this committee is that this feeds into the annual governance statement because it is addressing a weakness that was previously identified. Just a short word about my background and my experience in relation to this. So my experience in history is I'm a local authority corporate resources director, but I have been a finance director, section 151 officer in local authorities for a very long time. And in fact, I was one of the presidents of those societies that Councillor Cox was talking about at one stage. But most recently, my experience has been with councils that have been experiencing difficulties, not here at BCP Council, of course, but at councils like Croydon and Liverpool, where I've been working with commissioners to resolve issues in relation to a number of financial problems, but also in relation to governance problems, and in particular in relation to council companies. And certainly at Croydon and at Liverpool, I was leading a programme of work to resolve those sorts of issues. And I mean, a notable example of where a similar issue arose is Nottingham, where in 2020 they received a report in the public interest from the external auditor in relation to their shareholder governance issues over Robin Hood Energy. So that governance review that was conducted independently, and which then fed into the best value letter that we received, highlighted some concerns over future places, and in particular the issues around how the council had conducted its own shareholder arrangements, and also raised question marks over whether there were issues in relation to other council companies. So that's one of the fundamental drivers for this report. We think that the proposal that we've put forward provides us with a structure that creates the sort of space that is required at each level of the organisation to be able to deal with the shareholder issues properly. It creates the resource that's necessary in order to service that. And it provides the clear accountability that's needed in order to hold people to account for the way in which council companies are managed from a shareholder point of view. We've put in a timeline to explain how long it's going to take us to get to the position where we fully implemented this, but I can confirm that following the council, the cabinet decision yesterday, we have set up some of the meetings that need to be scheduled in order to implement this governance model in the next few weeks. So I'll finish there. Thank you, Chair.
Thank you for that. Any questions from councillors? Councillor Sarah Armstrong.
Thank you, Chair. It's a question with regards to point 5 on the notes that have come following the council meeting. It's with regards to the scope of this report that's coming is going to be limited to companies where the council is the shareholder. The second phase of a future report, so am I right in understanding that that will also include where the council has its own charitable or trading arm? So there was that, just to clarify, and also to ask about whether community land trusts or anything else around that would also be included where we have representation or councillors are active on those boards, so that it's not just about charities, associations, community interest companies and societies. There may be other sort of governance frameworks that councillors are represented on.
Mr. O'Donnell, can you answer that all?
Thank you, Chair. The intention is for us to look at any arm's length bodies where the council has influence, so that we can provide assurance to you that those are effective vehicles for delivering our council policies.
Thank you for that. Any other queries? Oh, Sam Acton.
Can I ask a question about a bit of detail in your recommendation, which
It's very thorough. Thank you very much for sharing it. On page 98, talks about the board regularly monitors conflicts of interest, including with suppliers and users, as the action to look at that. Unfortunately, this council has learned the hard way through the Bayside project that monitoring doesn't necessarily result in action. So conflicts of interest were declared, but nothing was done about it. Is there any way you could enhance the word monitor so that it's not just looked at, that action is actually taken, please?
Microphone, sorry.
Chair. Thank you, Chair. So I think what we're trying to do in this template, and this is something that has been developed by the internal audit team, so we might ask them to comment on it. But what we're trying to do is set out in this document the sorts of things that we are going to be testing as part of our review in order to understand whether the company is being effective, and in this case, the activities of the company are represent good governance and are effective in delivering the outcomes of the law. So yeah, I mean, I think we're happy to take that away and review the wording. The principle that we're attempting to demonstrate here is that they should be complying with good governance practice. And so if we haven't quite captured that right, we'll take it away and have a look at it.
Thank you for that. Councillor Collin?
Yeah, so my question is on generally how we can be confident that the proposed recommendations will avoid a repeat of the disaster that was Future Places governance. So I think the key point that the report notes for me is that the council needs to ensure that the entities continue to deliver in accordance with the initial business case and subsequent business plans. And I think the question is how to ensure that that continues to be monitored on an ongoing basis. So what I'd be keen to understand is what the plan is for us to have a regular sight of the council's of what's going on with these entities. So I like that the reviews started based on the draft work carried out by the internal audit team set out in Appendix 4. I think that's a great start. But what I think I would like to see as a committee is for that to come to us on an annual basis, or some such proposal, something on that. So I think what should happen is that there should be a management review of what's going on with these entities, whether they're still the business case still applies. Then that should be looked at by internal audit, and then that should be seen by us. So keen to know how that sits with the plan as it stands. Is there capacity for that to be built in?
Councillor Hannah, you indicated first you might have an answer or a response.
Just to say that I share the same kind of concern, and certainly when it comes to the annual business plan coming to cabinet, I would not want that to be nodded through simply as that is what we would like to see happen in the future. That part of that report would include how things have been happening in the past. So in terms of cabinet, yes, share that concern. I would also expect that the relevant portfolio holders for each of the companies would be keeping track, liaising with the council officer who will be on the board to make sure that they are aware of how the company is working during the course of the year. And that would not simply be once a year. But then it would be, I assume, for this committee to decide in what way it wishes to monitor.
Okay, Mr. O'Donnell, I think you can help answer that as well, please.
Thank you, Chair. So the responsibility for holding the companies to account for delivery will rest with Cabinet, because Cabinet is the one commissioning them, and so they will have to hold them to account for delivery. And so in doing that, they will have to receive information on a regular basis about performance of the company. And that performance will be measured against the business plan. So getting the business plan right in the first place is an extremely important part of it. But some of the things that we haven't had, I think, in recent times are things like KPIs for the companies and clear understanding of the timescales that they're working to in terms of delivering their program work. So all of those things that this report is recommending will be dealt with within the new governance structure, which means that there will be a very different approach to reporting this information. So it will be going to cabinet, and so it will be available through that route to the public and of course to members of this committee. I mean, I would see the role of this committee as wishing to have assurance that these arrangements that we are putting in place are effective, and that the Cabinet is indeed holding those companies to account in the way that we've envisaged through these governance arrangements, but the governance arrangements are working at each level. And that might well include things like looking at whether the business plans actually encapsulate the intentions of the administration. Although we do need to be careful that may cross over with work that scrutiny could be done.
Thank you for that. We've got Councillor Phipps indicating next, and Councillor Cox.
Well, so it's a bit of a, just want to say something first, and then I'll come to potentially a question. But having been on this committee for a while, and some of you know I've also been on it for since May. We keep having lessons learned, and I'm a bit fed up with hearing that. Keeps coming up all the time. Lessons learned, and here we are again. We're already supposed to have had lessons learned. I think there was something that was brought to this committee was the bounce back grant carry on, the Bayside restaurant, we have the beach hut sales to ourselves, all these things that we're supposed to learn lessons from, and here we are again. It just seems quite bad, as you know. This is culminated in the financial management of the council even being brought to the attention of the Secretary of State, who wrote us a letter. I mean, how bad can it get? Something really, as I think is already recognised, is seriously wrong. Certainly as far as governance and quite a few things are concerned. We're just asked here to note all of this. Fine, okay, we're going to note it. But surely there's got to be some responsibility somewhere. The report in it somewhere here does mention improved accountability. Well, I think that's sorely required. Where is the accountability? We just seem to be having to review one disaster after another. And I'm hoping there won't be any more. I understand we're definitely heading in the right direction. Well, I hope we are. And a decision has been made as well, just going back to future places, in September 23, is it? Yeah, that the development and investment activities are going to be brought in-house by March 24. Well, we're coming back. Where is that going to come into house? Is that the Economic Development Department, where quite a lot of these disasters, I think, or things that need accountability may have come from previously? I just think we need to have, I'm very pleased to hear from behind me that there's going to be a different approach. There certainly needs to be. We certainly need updates on that, which is what is being asked for. And I, for one, definitely need some assurance that things are going to get better, you know, from a governance point of view, certainly. So I think my question is, you may have answered it somewhere along the line, but where is the accountability? And I really don't want to have something else coming back here where we're learning more lessons, because we don't seem to have learned very many, and I hope this is the last one. I'll leave it at that. Thank you.
Thank you for that. I don't know whether Councillor Cox wants to answer that or raise his question or statement. Councillor Cox, you're next.
Thanks, Chair. Well, actually, I think I can, I won't say I can answer it, but I'd like to comment on it. I think the fundamental thing with this report and going forward is that we have to put in place a system which protects the council and to use Mr. McKinstry's expression, to protect the council from Aristotelian flaws, and actually that's what we need to do, is to make sure that that can't happen again, and the disasters, if you don't mind me saying, of some of the things that Councillor Fitz was talking about, they shouldn't happen again, and we need to put in place processes that mean that they don't. And I would certainly welcome the A&G, because that's what it's all about, is governance. The A&G having a role to review these things on an annual basis, if necessary, so that there is somebody else looking at them, and there is somebody else not just monitoring them, but taking action where they feel that something is going wrong. And that's where we need to go. And that's certainly, I believe, this report is a good start to go along there. I'm sure we can improve on it further, to be honest. But and as for accountability, I think the people that got us into this mess in the first place have been held to account, and that was at the May elections. Thank you.
Thank you for that. We've got a leader indicating and may want to help answer that query or question from Councillor Phipps. Councillor Slade.
Thank you, Chair. I suppose when this paper was put together, and I may have referred to it if you were listening in at scrutiny on Monday or even at Cabinet on Wednesday, because say this is the third time this paper's gone through, and I would want to question actually the order of things here, because A&G has a role to play, and now this paper's gone through, it's a bit back to front. So I have raised that already, but my concern when this paper came through is that there will be some individuals who will want to see blood on the carpet, and actually what they're looking for is, you know, somebody hung out to dry for this. And as Councillor Cox has said, you know, some of those people, you know, have learned their lesson in one way. Other people are no longer with the organisation and they've been made redundant, or the company has been closed down. And I think we did have a discussion, myself with a number of individuals, about whether we should hold a formal investigation and really try and wring out officers. And what purpose would it have served? You know, because there was no illegal activity here. It was poor practice. There was a lack of procedures, and there was a lack of safeguards in place because somebody hadn't set things up properly. So in setting things up properly going forward, we can make sure that doesn't happen again. And I don't want to see officers who did the best that they could in difficult circumstances with a system that was not set up with the right governance, being hounded for months or years, when actually what we've got to do is run the council, serve the people of BCP, and we need those officers fully focused on the future. So we made a deliberate choice that this wasn't going to be about an investigation, because there was no evidence of illegal activity. It was poor practice. So I you know, whilst I sympathise with Councillor Phipps's concerns, I hate the phrase lessons learned. It feels very wishy-washy, but I think the level of scrutiny and detail that's happening with this, and the commitment that we need to look at, do we even need these companies? And we're going to look at each and every one of them by March of next year, I think is what you need to hear. I did listen to Mr. McKinstry's questions, and I do understand his point about a council that had a large majority, you know, can railroad anything through. Well, we saw that last time. They didn't have a large majority, but they behaved as if they did. And it was very easy for them to create a majority by waving, you know, lead member roles around. So you know, there is always an element of risk, and that's why having formal procedures in place so that we can test against it, I think is really important. And I think that this goes a really long way, but if it can be improved, then let's improve it. But let's not hamstring ourselves for the future.
Okay, Councillor Phipps, just come back quickly, okay? Okay.
Just want to say thank you for that. I do appreciate that we're going in the right direction, absolutely. But I think it was important, and I felt it was important to make those points, because I and I'm sure others are fed up with lessons learned, and I'm hoping we're not going to have any more. But thank you very much. Hopefully we are going the right way now. Thank you.
Okay, Councillor Cox, do you want one final comment from you?
Yeah, it was really just to back up what the leaders just said. You know, not to try and get into Greek philosophy here, but I think we could be in danger of displacing the Archimedes principle in terms of equilibrium of the council. If we spend so much time going over what went wrong a few years ago, we need to move on, set policies and procedures in place so that it doesn't happen again, and get things right in future. Thanks.
Thank you. Councillor Player-Waite, you indicated a while ago.
No, that's fine.
Yeah.
I was indicating no.
Not just, no, okay. Councillor Corley?
I had one quick follow-up question. On, do you feel that the council has sufficient expertise to be able to do that assessment on holding the companies up against the business case? Sometimes there's an issue with the expertise to understand commercial decisions not being in-house. So keen on views on that.
Okay, I've got Councillor Rich Herrett indicating next.
Should we hear the answer to that question first?
Sorry?
Sorry, I perceived
sorry,
that's a question.
Yeah. Get the answer to your question first. Sorry, jumping ahead. Mr. O'Donnell.
Thank you, Chair. Well, one of the reasons why we included the details of the methodology that the audit team has developed based on the best practice guidance is to demonstrate that we've created a process which breaks down the questions that need to be answered into a manageable process for collecting information and interpreting it. And so I do feel that if we follow that process, we don't need people who are experts to gather that information. That will then be considered within the governance structure that we've set up in relation to companies. But there will also then be an opportunity, because we will produce a report in relation to each company. There'll be an opportunity for that to be looked at here. And indeed, if we need any specialist expert advice, then we will be able to commission that from outside. So I feel confident that the approach that we're taking will deliver the result that we need.
Okay, thank you, Councillor Herrick.
I'm not quite sure how this bit works, but having kind of given it an airing, the recommendations obviously we have with that, but can we add a sixth point along the lines of Councillor Connolly's suggestion that we receive kind of some kind of annual report on that, and move that we then kind of note the rest, I think is what we're meant to do. Okay, well, in the published agenda that we've got here, which is on paragraph 55, that, based on what Cabinet's decided, has been expanded. So that's been circulated to committee members, and it's the text in black is the original text. There's this added extra text in red, which for paragraph 1, I will just read it out because members of the public who've just got the published agenda won't have it. So paragraph 1 has added to it now, subject to the amendment of the third red box to the right, replacing the words company has no role of scrutiny with company may be requested to provide evidence to support scrutiny as required. In paragraphs 2 and 3, as set out in the published agenda. And then there's additional paragraph 4 notes that the review of the council companies will also consider in each case whether the original reason for establishing the company still applies, and appraise the future options for delivering the function performing by the company, taking into account the cost benefits,
the benefits to residents, the potential for accountability and transparency, and the avoidance of potential conflict between the aims of the council and those of the council company. And the fifth one notes that though the scope of this report is limited to companies where the council is a shareholder, a second phase that will be the subject of a future report will consider council control and representations on the boards of other organisations such as charities, associations, community interest companies and societies. And the sixth paragraph, and I'll let Councillor Colley, this is for the annual review.
That this review should be subject to, so that's not the review by internal audit, is it? That's the review by management that's being talked about. And then subsequently that would be looked at by internal audit. Is that the case? Or is the review talked about in paragraphs 4 and 5? Is that the internal audit review?
Mr. Stannard, can you paraphrase for us?
Thank you. So I'm seeing this practically as a checklist that, as Councillor Connolly said, would be produced by management, and we would use the red, amber, green, in that example in the report currently, and that could come to this committee on an annual basis. But the validity of the red, amber, greens, internal audit would look at that, and in my mind, and we would be seeking evidence where there's an evidence base, where it says, are there terms of reference? We would, spot check, are there terms of reference? Yeah. So I don't think we would go through every single line, because there has to be some reliance on management. But our role would be that third line defence at the end of the process. So that's how I see it in practical terms.
So how about paragraph 6, an internal audit will bring a report on this assessment to Audit and Governance Committee on an annual basis, something like that.
Have you got that?
I have, Chairman. So the committee are asked to note the first 5 paragraphs as agreed by Cabinet.
Yes.
And then you're also requesting a 6th item, an annual report.
For AG, yes. Yeah. So that's been proposed. Councillor, I need a seconder, Councillor Chapman-Law. So we can take a vote on that, unless people want to debate. We have given it a good airing. So it's gone through Cabinet. We're echoing what Cabinet's decided. We're adding a bolt-on extra one for us because we're the audit commission, committee, as it were. So I'll be voting on this. So all those in favour of that proposal.
Okay, that's unanimous.
That's unanimous. Thank you for the officers for presenting that report. I know a lot of effort's gone into presenting that and creating it. So thank you very much for all your effort. We can now move on to item 9 on the agenda. That's page 105 on the one line, as it were. It's risk management corporate risk register update. And we've got Fiona Manton, I think, joining us online, hopefully. So Fiona, it's over to you, please. Thank you.
Thank you, Chairman, and good evening. This is the quarterly update to the committee of the Council's Corporate Risk Register. As part of the continuing development of risk management and the reporting of, to assist members this quarter, I've included a summarised version of the risk management process we follow. This is included as Appendix 1 on page 111 of your report package. To further support members in the approach of the Council, at Appendix 2 on page 113, I've included the Council's risk matrix, and the definitions are also included. This matrix is a 4x4 matrix where risks are mapped by assessing both the likelihood and the impact. The basis of this assessment in terms of impact is provided by the definitions on page 114 of the reports package, with the likelihood being outlined on page 115. The assessment, you will note, is based on 7 possible aspects of risk and encourages factors other than financial risk to be considered and the full implications of the risk to be understood. In addition to these documents that are not usually provided and have been provided in this quarter's update, to continue to assist members, I wanted to provide a little bit more background around the approach to risk management and the quarterly process we follow. Each of the corporate risks are owned or have the oversight of a corporate director. Each quarter, each risk is reviewed in terms of the following criteria by the risk lead. The questions we ask ourselves are, does the risk title best describe the risk? Are there any additional mitigations to note? What future actions are planned in the near future? And the provision and update on the risk in terms of the quarter's activity. We review the risk scoring in every aspect, so that's the gross, the net, and the target or preferred risk score. And we review the overall risk strategy in terms of the treatment of the risk. My role is to collate the updates and report on the risk register. The report format of these risks has been developed over time, with adjustments being made following feedback from both officers or from this committee, and these adjustments continue. We're always happy to receive feedback and adjust the style of reporting if this would assist members of this committee. The register you see here today is the Corporate Risk Register. This represents the top level of risk for the organisation and sits at the top of the risk cascade. By this, I mean that sat below this register are directorate, project, and in some instances, team risk registers. On the completion of the quarterly reporting cycle, the corporate risks are routinely shared with the risk champions in each of the directors, who would use this to inform their own reviews of their own risk registers. This ensures the completeness of the process. In addition, directors' risk registers are on occasion reviewed by CMB as part of the quarterly process, so that CMB may consider if any risks need to be escalated via this review. In addition, and on an ad hoc basis, directors may also escalate individual risks for consideration as corporate risks, and again, these would be presented and considered by CMB. In addition, corporate directors also may escalate risks. This is an ongoing process. Risk management continues to develop, and both the review process and reporting will continue to evolve to ensure it remains fit for purpose for the organisation. In response to feedback, at Appendix 3 of this report, a dashboard report has been included, which provides a snapshot of the information on the Corporate Risk Register. It shows the current corporate risks, the risk lead, and the movement of the net scores over the last 12 months. In addition, the distribution of the gross, net, and preferred risk score is shown on the matrices at the foot of the report. In relation to this quarter's update, to assist the committee, at paragraph 9, the material updates to the risks are outlined. The corporate risk register is shown at Appendix 4 in a summarised version starting at page 119. In this quarter, the report also refers and references the director level risk registers and the review and consideration of these during a meeting by CMB. It notes that as a result of this review, the following was agreed. Corporate directors will be reviewing all risks rated as high within their directorates. A new risk around adult social care was considered during the quarter, and it was agreed that a more generic risk would be added and created and considered during the next quarter's review phase. This risk will be around service standards. A risk around the prevent duty was also considered by CMB during the quarter, but this was not added to the corporate risk register at this time. Again, this will be considered in a wider form consideration by CMB in the future. Common themes appearing in director level risk registers were considered and reviewed to ensure they suitably were reflected in the overall corporate risk register. As part of the above review process, CMB confirmed that a fundamental review of the risks will be undertaken once the corporate strategy is approved, with risks being aligned as necessary against new objectives and additional risks being added as necessary. Finally, as part of review of the risks, the key assurance risks were considered. These relate to information governance, emergency planning and business continuity, and health and safety and fire safety. In terms of the continuing development of risk management, the process of developing a new risk management policy continues, and this draws on best practice. The development of this policy will ensure the Council's risk appetite and risk tolerances are clearly articulated, and it's been agreed that during the next quarter, CMB will review the Council scoring matrix and definitions to ensure they continue to be relevant to the organisation and that the appetite and tolerance are set at the correct levels. Once this exercise is complete, all identified risks at all levels of the organisation will need to be reviewed and refreshed in light of any revisions to the scoring matrix or definitions. Following this review, the policy will then commence its consultation phase before proceeding through the appropriate processes for review and approval. Finally, prior to this meeting this evening, I was provided with a list of requests and questions in relation to this agenda item. I'd like to confirm I will work through these questions and items during the next quarter with the relevant REST leads and ensure all the matters raised are addressed and an update is provided in the next report. However, I am able to advise that in relation to some of the points, some sections of this report are relatively new in terms of reporting, and obviously there's a deadline for the collation of the report. Some of the information which is identified as not being present is in the current dynamic risk register. It just wasn't in time for the deadline of this report, if you like. So hence there are a few sections that don't include data. Thank you for the opportunity to present my report, and I'm happy to assist with any questions where I can. Thank you.
Thank you for that. Thank you for your well-presented report. Lindy Van Vuren, one of our independent members, you're the person who sort of came up with those questions. Obviously, you know, the officer hasn't got the ability to answer them all now, but thank you for your considerable time that you spent reading the document and studying the document, understanding it. Do you have any comment or statement to make or question for the officer?
Thank you, Chairperson. Yes, I will then await the answers on the questions I've asked. Just to maybe highlight just a few is the cyber attack CR4, the cyber attack risk. There should be due dates for the actions, and I would like to know further to that what consequence management have been decided on, because some of these trainings for staff is released almost 2 years ago and staff have not yet completed the training. And it is said that for these cyber attacks and how the hackers get in, the biggest risk of a company is the people in the company. So if the employees do not do the training, this is a huge red flag for me. And I feel that after 2 years, there should be some form of consequence management for people who's refusing or not refusing, who don't get to do the training. That was a big risk for me. And then just, but you will work through those. The ones that had the same net and gross score that remained the same, something needs to be done there. And then the last one that I want to highlight is CR20, the climate change. That one is there was in Q2, there were 7 actions that were to be implemented by Q4 of 2024, but they're missing from the new report. I would have liked to see the progress towards implementing those due to the fact that it's such a high risk in the registers. And also the net risk also remains the same, and there should be more actions. A deeper dive should be taken into the specific risk, and it needs to get more attention. If I can get better concise feedback on that risk. Thank you, Chairperson.
Thank you for that. Fiona Matters, have you got any initial response to that? Appreciate that, you know, it's an ongoing matter, but any comments?
Yes, thank you through you, Chair. I can confirm where the target dates are missing, or where the dates are missing. I have got dates. So as I say, it's just a case they didn't come in before the release for the report. The other matters, I will ensure they are addressed and respond.
Thank you for that. Councillor Sarah Armstrong.
Thank you, Chair. And thank you for your comments, actually. That's what I would like to refer to. So the first thing I'd like to comment on is actually the style of the report, the format. I'm looking at Appendix 3 of the Corporate Risk Register dashboard.
And CR20, which is the adaptation and mitigation of the negative impacts of climate change, including sea level rises and weather pattern changes on BCP communities, you could almost miss that. And then when you look along and you compare that with the other risks, it scores like as almost certain and extreme. It's the highest scoring risk that we have on the dashboard. I think rather than have the risk reference dictate, which is the column on the left-hand side, dictate the order of the risks, I personally feel that should be right at the very top, because if we don't address that, then all the other risks, we're not going to be addressing those powerfully. So my request would be that this risk is escalated right up to the very top, and it is fully reviewed to ensure that we are doing everything that we possibly can to address it. I also want to note that we still haven't got an adaptation manager in post, which we really need to have that post filled. So I'd like an update on that as well. Thank you.
Any comments? Fiona Matter, you've got any comments on those queries, or is it something that you can feed back later?
I'll take those away and feedback. Thank you. But certainly in terms of the when we present the report, I'm more than happy to change the orders around. That's not a problem. Thank you.
Okay, thank you for that. Any other comments or questions? Basically, this report is to note, and when will you be presenting the next update? When will the next one be forthcoming from you?
It will be to the next meeting of the next formal meeting, which I would imagine is April.
Mr. Stannard?
Yeah, the next core meeting. So we have got a extra meeting in between, but the next core meeting is on the 11th of April 2024.
So we can have an update on some of those queries then, please. Thank you. Okay, well, that report is to note, so we don't need to take a sort of formal vote on that. Thank you very much for your attendance. Councillor Armstrong.
Thank you, Chair. Can I just clarify? So how will that risk be escalated? How is that risk going to be treated going forward? I'm not clear.
Well, perhaps once Fiona Manton has looked at the matter and considered the matter before that meeting, is it possible for you to circulate an email to committee members on that particular query that Councillor Armstrong is raising?
Yes, certainly.
Yeah.
Well, I think looking at the mitigating actions, I think they're lacking in terms of how we really address this risk. So I'd like to know where will that inquiry take place? How will we know that the actions that we're putting in place are sufficient to be able to mitigate the impacts of that risk? Because I'm not sure that what's in the document currently addresses those.
Could I suggest that you and Fiona Manton exchange a couple of emails, or perhaps even have a discussion on this? That will enable for some work to be done on this. Chief Executive.
Thank you. Just a comment that we have to point out, I think it's in paragraph 18, that we are reviewing the structure of the corporate risks against the new corporate strategy. We will be rewriting and re-looking at them. So we can look at the way that we present them fundamentally in line with the new risk structure under the new corporate strategy. Some of the discussion, the detailed points would help us if the councillor can raise that with Fiona in the meantime. But certainly I think the next risk, I'm hoping it will come the next time, there will be a fundamentally restructured risk register based on the new corporate strategy rather than one that's based on the old. That's helpful.
Yeah, thank you for that clarification, Mr. O'Donnell.
Chairman, I am the risk owner of this particular risk, so I will undertake to take those concerns away and come back to you with a response.
That would be useful. Then we can have an update at our April meeting. Thank you very much for that. So that concludes item 9. We've noted your report. Thank you very much for presenting it. We now move on to item 10 on the agenda, which is the annual governance statement 2022-2023. It's the action plan and update. This is page 159 on your agenda. Nigel Stannard, over to you, please.
Thank you, Chair, and good evening, members. This paper updates the committee on the action plan agreed as a result of last financial year's, that's 22-23, annual governance statement, which this committee considered back in July 23. As you probably recall, the annual governance statement is an embedded document within the statement of accounts bundle, which is audited by Grant Thornton. And the well-documented national and local delays in the external audit system are therefore delaying the auditor's sign-off of this annual governance statement, but this should not stop the council addressing the action plan. So you'll recall the council identified 5 significant governance issues impacting the council, and this report at table 1 goes through each of those and provides an update on the action points. Just bear in mind that the shaded areas of table 1 are what was presented to you back in July 23 to summarise the governance issue. Also note, there's an update against the Financial Management Code, and that's shown in paragraph 12. The council is compliant with the code, but some areas of improvement were identified and progress in these actions are shown at table 2. Various colleagues in the room or online may be better placed to comment on specific questions you might have, but I'll attempt initially to answer them and through the chairman draw colleagues in if needed. Thank you, Chair.
Thank you for that. Any questions or comments, please? No. Essentially, the report is to note, and we got a recommendation there. It's recommended A&G committee note the progress made to address the significant governance issues on BCP Council AGS Action Plan 22-23, and B, position in respect of compliance with Financial Management Code. So, can we take that as accepting that report, please? Okay. Thank you, Mr. Stannard. That concludes item 10. Item 11 on the agenda, Assurance Framework and Internal Audit Planning Consultation 2024-2025. Again, Mr. Stannard, it's over to you.
Thank you again, Chair. Public sector internal audit standards requires the relevant board or committee to approve preferably an annual, or sorry, I should say at least an annually based risk-based audit plan and an audit charter. This committee is that relevant committee at BCP Council, and this will be done at your meeting on the 11th of April 2024. Prior to that meeting, it's good practice for the committee to be consulted on the high-level strategic approach and framework so that I can incorporate any strong views or comments into the plan and charter. Turning firstly to the assurance framework, which is shown at Appendix 1. This is the skeleton or map, if you like, in which we hang the more detailed audit plan off. It shows the significant or key assurance functions the council has in place and is presented utilising the 3-line defence model. Crudely speaking, internal audit is the 3rd line of defence, and our work considers the adequacy and effectiveness of the 1st and 2nd lines of defence. In practical terms, this means firstly looking at systems, controls and operational arrangements implemented by management, and that is the 1st line of defence. Secondly, we will be looking at the support, checks and balances, oversight offered by the 2nd line of defence, which are the corporate teams and the corporate boards and the culture and the strategies and policies and so on. Ultimately, of course, this is all to ensure the assurance framework contributes and helps the council achieve its stated objectives and outcomes. Turning to the high level internal audit resource allocation on the tables at pages 174 and 175, one of my key responsibilities is to ensure sufficient resource is available to provide you with a suitably robust overall opinion based on all the work that the team has undertaken. Against the backdrop of Council's overall financial position and the need to identify overall savings, you may be wondering how this proposed plan shows growth over the current year's resource allocation. That's about 275 days, and that's the bottom right-hand corner on the table. This is explained by the restructure that I've reported to you previously, and the fact that the 3 apprentices that we have essentially replaced 2 higher cost auditor roles. So in other words, the plan has more days of initially less experienced and less qualified staff, but at broadly the same cost base. Public sector internal audit standards does require me to positively state that I believe this resource allocation is sufficient to meet my own professional obligations and to provide the council with a suitably robust internal audit team function for 2025. Finally, Chair, much to my disappointment and embarrassment, I must unfortunately state that there are a couple of errors on the table at 174 and 175 in the subtotals. The individual lines and the grand total does cast. So I have circulated and placed on the tables a new version of that, and I apologise for that error. Thank you.
Thank you for that. Any questions? Councillor Phipps?
Yeah, just looking at page 179, it's the table Audit and Governance Committee Effectiveness Governance Framework. Obviously, there's various sort of departments there. There's finance, people and culture, all the rest of it, law and governance. Is there anywhere in here comes into, because we've obviously been discussing this sort of thing, like economic development and things like that? Does that come into here anywhere as part of being looked at as for the governance?
Yeah, through you, Chair. Yeah, this is the key assurance framework. That doesn't say that the elements that are not on the key assurance framework do not feature in the audit plan, because I also have a requirement to ensure that there's appropriate full coverage across the council. So whilst economic development, in your example, don't necessarily fall in any of those specific categories, but for example, you know, the economic development team will be delivering procurement, for example. So we get to economic development through those categories, as well as specifically looking at some high risks in those economic development areas, using your example.
So how do we, you know, should they not be sort of mentioned anywhere, or you're just saying that it's included but they're not mentioned, basically?
Yeah, given that this is the high level strategic consultation, in the April version you will see a much larger template and a matrix which maps the individual audit plans across the individual areas and teams, so you'll get a much better feel for the overall coverage in that document.
Councillor Beasley?
Thank you, Chairman. My question to Mr. Stannard is in relation to single person discounts for council tax. I've been in correspondence with Mr. Richards on the subject, and I'll forward you my email and his response just to square the circle, so to speak. I think my question is, it's always a question of yield, is it not, in terms of the resources the council puts into this exercise, and I've referred back in my correspondence to an initiative that we undertook in the former Bournemouth Council. I'm concerned, I suppose, in a way, when we move on to the next report at 12, which is the backward looking one, if you like, as to the level of that yield. And I wondered whether you could tell committee, if you had more resource, would that yield be good value for money? In other words, would it yield more than the cost of the resource that was put in? Because clearly if it did, and if you believe there's potential for that to happen, then it's something that we should be doing regardless of budgetary constraints, because it will be to the benefit of the council. And my second question, I suppose, is on the same theme, but with regard to adopting best practice from other local authorities. Because I'm well aware of the size of BCP makes it a somewhat more cumbersome vehicle to achieve a better yield. And I think it may be something that if we were comparables, if we were doing some comparisons with other local authorities, we could perhaps have a better idea of how that might work from their experiences.
Mr. Stannard, I know that obviously it links into the next item, but perhaps you can comment about single person discount.
Yeah, as Councillor Beasley correctly says, there is a bit more of an element in the next report item, but the key thing for me at the moment, Councillor Beasley, is this is a pilot, and we're only 3 months into the pilot, and the initial stages look favourable, but I don't think I'm in a position to necessarily give you a firm view on whether more resource would be cost benefit at this stage. But Adam Richards might have a alternative view.
Mr. Richards, yeah.
Just to highlight, when it comes to single person discount, Nigel's team is currently undertaking a pilot based on the work from that pilot. We've incorporated it into a savings proposal, which is part of the 24-25 budget submission. It is looking at creating and putting some extra resources in the income team, so that they can look at and undertake the learning, using that word again, the learning from what Nigel's found this year, and ensure that that's embedded in regards to practice going forward. Now that team, which is technically part of the revenue benefits area, has also got contacts with other revenue benefits teams across the council. So they're also looking at it from a slightly different angle and trying to embed good practice as part of that process as well. So hopefully a combination of what Nigel's doing and the revenue benefits team will ensure that we have a robust proposal going forward, that the assumption within the budget is that that will generate additional resources, because it will point out to people that they've been erroneously claiming single person discount, and therefore it will increase the council tax yield.
Councillor Conway.
I have a question on this, but I noticed it's agenda item 12. So do you want me to wait or ask my question about single person discount now?
It is, you can, well, I suppose on your question, but we have single person discount, but we could discuss it in the next item.
Yeah.
Okay. Okay. Well, Councillor Conway.
Just a quick question, looking at the framework on Appendix 1, that's page 179. Going back to our discussion earlier about council-owned companies, how would they fit into this framework, if at all?
It's a similar answer to Councillor Phipps's question, actually. So the council companies will be doing some of those key assurance functions, like procurement, like ICT controls, financial management. So there'll be elements of the key assurance functions that will feature within the company's audit, and then again from a more service high risk basis, you'll see that the companies will feature in that more extensive plan and map that I'll show you in April.
Okay, thank you for that. We've got a recommendation there. We actually need to take a vote and agree the BCP assurance framework. Obviously, item B there, comments from feedback has been made, which Mr. Stannard can take on board. But can we formally vote to agree the BCP assurance framework? I will propose from the chair. The vice chairman will second it. So take a vote on that. So Mr. Stannard can move on. Okay. And item 12, this is the internal audit third quarter 2023-2024 audit plan update. And Mr. Stannard, I think again you're presenting this, and this does also include comments about single person discount. I think you can probably update the figure that you got set out there, because obviously that was calculated 3 or 4 weeks ago, and I think there's been you can update it as at today if you wish.
Indeed so, Councillor Andrews, but don't steal my thunder just yet. I hope you don't mind, because I had a little bit written down about single person discount, although we slightly covered it in the last item. I'll just read it out as I prepared it, if that's okay. So the delivery of the 23-24 audit plan continues to progress well. The 3 audit apprentices appointed in September are far exceeding our expectations, and are thus contributing to the delivery of the plan to a much greater degree than we anticipated, which is great news. Of the audits completed in Q3, of which there were 17, and these are shown at the table in paragraph 3, on an exception basis, there were 3 partial assurance audit opinions given. And as per the agreed audit charter and the agreed reporting requirements, paragraph 5 shows the committee the key issues identified across those 3 partial assurance audit opinions. During the report briefing period, Councillor Cox, is Councillor Cox still online? No, he's not, but Councillor Cox asked me to include a summary comparison table on the overall number of reports issued and the recommendations made, and that's shown at paragraph 4. This table will feature in the quarterly reports going forward. But please note the limitations of that comparison, and I'm keen that no perverse incentives get created within my team to make unnecessary recommendations to boost numbers, for example. But obviously that's for me to manage and prevent. Elsewhere in the report, please note the initial success of the SPD pilot, previously explained in principle to the committee, but now starting to deliver real pound for pound savings and additional council tax yield. The pilot, you'll recall, is a systematic review of the National Fraud Initiative data matches. That may indicate SPD has been claimed fraudulently or in error by a BCP resident. This report states that since the pilot started in earnest in late September, we've removed or recovered inappropriately claimed SPD of £79,000. As of today, that number is £105,000, and we continue to deliver about £15,000 savings per week. It should be noted that these savings are ongoing and not one-off, and the council, as Adam has explained, the council's MTFP and funding sources does assume some increased council tax yield as a result of this project. So I'll stop there and answer any questions.
Thank you. Yeah, Guy from the chair, through you, Mr. Zoll, to thank the officers who are pursuing this single person discount situation where people are 2 or even 3, even more than that, are claiming only a single person is living in a dwelling. It's unfair on the other residents in BCP who are sticking to the rules for some people to breach the rules. And, I think the warning should go out that if people are doing that they should stop it and pay their fair dues. Mr. Richards.
Just to say, Chair, there will be a leaflet in the council. There will be a pamphlet in the council tax billing sent out as a reminder with regards to the rules and regulations.
That's excellent news. Well done for organising that. Claire Waite was first, and then Mr. Councillor Beasley.
Thank you. Yeah, I was quite disappointed to read that the national penalty is only £70. I said to one of my colleagues, like, well, you only have to get away with fraudulently claiming for a couple of months, and you've got effectively an interest-free loan from the council if they catch up with you. It's like the incentive is to, at the moment, to cheat the system. So I see that you're claiming costs back, but I think should we be whacking on interest and our time? So there's actually an incentive for, you know, 'cause it's just too easy for people at the moment.
Mr. Stannard, any comments? Is that a national set fee or fine?
I like Councillor Waite's thinking. Unfortunately, we're legislated not to be able to do that, and we're just allowed to recover the £70, which is in lieu of officer time to chase, and that's the national position, unfortunately, which
Ms. Richards also filling on that.
Just to emphasise, Chair, this isn't a situation that's particularly just SPD, in the sense that there are a number of charges the council levy, which actually we've made representation to government to say we should have the power to increase. So that's an ongoing dialogue, and this one can be another example that we throw into that conversation.
Is it something also you've raised, or we're raising with the local government association, who can, shout a bit louder than we can on our own?
We have done generically around, a load of those fees and charges. Like, I think that the one we often refer to is penalty charge notices for parking. So that's just another example that, with regards to having greater local flexibility around those charges.
Wait, you want to come back on that quickly?
Sorry, I've gone a little bit blank. We're talking about. Sorry, it'll come back to me.
Okay, Councillor Beasley.
Thank you. Thank you, Chairman. So my earlier questions were, if you like, looking forward questions, because at item 11 on the agenda, it's the year after. In some ways, they're the wrong way round. In terms of item 12, my correspondence started with Mr. Richards back in November. So I'm really pleased with the progress that's been made. My congratulations to Mr. Stannard and the team for that progress. I wondered whether you could perhaps just repeat those updated figures. I've got here 105,000 year to date as of right now. Was that correct, that in addition to that, going forward, you're experiencing £15,000 a week now? Is that what and is your expectation that that is likely to continue? Would be my question, I think. But it does go to show, Chairman, and hence my original question, the potential yield that there is in here, and the degree of fraud that occurs unless it's left if it's left unchecked. So I'm doubly pleased, not just about the revenue, but the fact that it is not being left unchecked. And therefore, and thereby, encouraging other people to do likewise.
Thank you. Mr. Stannard or Mr. Richards, I don't know who wants to answer that.
Councillor Beasley did hear the numbers correct, but what we've done is we've specifically targeted the more likely and higher value issues first, and therefore the £15,000 a week is great at the moment, but it will reduce quite considerably because we are specifically targeting the higher value issues first.
Mr. Richards?
I just have a supplementary as well, Chairman.
Oh yeah, okay. Ask the supplementary.
Well, the supplementary, I think, was around how far back can you collect? In other words, is it just during the course? If you're doing it now, does it relate back to the beginning of the council's financial year, at the beginning of April, or how far back are you able to go?
We are legally allowed to go back to the point at which we identify the error occurred. So in some cases, we can go back 7 years.
Okay, Mr. Richards.
I'm going to maybe distract the committee for a little bit, in the sense that the team I talked about in resident benefits and income that we're starting to gear up to take over the baton, if you like, from Nigel's team in regards to single person discount. The other purpose of that team is to look at the potential to ensure that when we move to second homes premium, to make sure that people aren't, pulling the wool over our eyes in that regard, i.e. saying a property isn't a second home when it is a second home. So we'll be starting gearing up that control mechanism to try and make sure we protect the council's position as much as possible with regards to people trying to maybe undertake various activities to persuade us that a home isn't a second home when we know it is a second home.
Yes, I can understand it's going to be resort to police, whether their flat in London is their second home or their flat down in Boscombe. Councillor Chapman-Law.
Yeah, one of the concerns I've seen raised is where people, a couple, for instance, have two homes and then they claim single on both homes, which is a bit scary, and I'm not sure how you'd police that.
It's difficult. I'm sure other local authorities around the country are pursuing single person discount breaches, and if you can obviously learn from what other councils are doing, obviously that's beneficial. It's membership that LGA is good, and we can learn from other people's procedures, I'm sure. Any other council rate you remembered?
Yes, I did. Yeah, I just thought if they don't have their 7 years worth of council tax, would we they actually get CCJ for that? I mean, that's I was just thinking that's something you could go in your pamphlet as a reason to, not take an interest if you don't offer the council.
Yeah.
We would read it.
Okay, well, warning is going to go out through every household through the letterbox, and that single person, or not the single person picking up the envelope, will react accordingly. So we've got a recommendation there to note the progress on the audit plan, and also note the explanations reference Appendix 1. Unless there's any further debate, can we accept that as set out, please, and note the report? Okay, thank you very much. And then obviously item 13, forward plan. It's a refresh for the 2023/2024 municipal year, and this is the final item, but Mr. Stannard again. Thank you.
Sorry, Chair, I've just lost where I am, so bear with. Yep. So the forward plan, as we draw to the end of this municipal year, we've only got 2 more meetings left, and they're shown in the shaded columns on Appendix A. In a briefing this week, we did talk about reaching out to the committee, which I've done via email, and I've had some replies about potential 24/25 agenda items. We've also talked about the 7th of March committee, which will look at the annual evolutions of the 5 key policies that this committee approves. So we'll be doing that. And I've informed the chair that in truth, they're going to be quite light touch evolutions this year, because as you would expect, our policies are settling down and there's less change. If there's not a really urgent agenda item, the proposal was that we would rerun a insurance session, which was curtailed by the untimely death of the Queen. 16 months ago now. So we will update that with the insurance arrangements of BCP Council, including the new tender that's recently been awarded from the 1st of April this year. So we were going to add that as a sort of training session rather than a full agenda item with a report. It'll be a PowerPoint presentation probably.
So basically there'll be an agenda items, and then that will conclude, we'll go offline, and then there'll be a training session for members who can stay on.
Exactly.
That'd be very good. And there'll be some excellent suggestions, I think, committee members, for the responses that have been made so far. If anybody else has got some suggestions as to things that could be put on the agendas, then obviously Mr. Stanley and myself can get together and decide which ones can go on for the meeting for the 7th of March. Any comments, reference to forward plan, or can we just note what is set out again? Yes, that's accepted. And I think that is the final item on the agenda. So 10 minutes past 8, I make it. So I will now conclude the meeting, and thank you for those who've watched online, and good evening to you. Thank you very much for watching. Thank you.